ultimately, in real bull markets, it's been quite difficult. Hopefully this will change one day, but it has been quite difficult for any asset to not go up, even the shit ones. Like fucking Cardano is trading at 20 bill. One thing that this cycle will, I think, do, regardless of what happens, is it will, for the first time, kind of really nail home that this is not a purely zero interest rate phenomenon. Which I think that single thing opens it up to a huge amount more institutional investors. And we're back once again. Maximum energy, maximum hype. Mika's been sick, so we haven't been recording. I'm getting sick. Ricardo is just kind of low energy anyway. So let's see. We're going to try to get all excited about stuff, but we'll see how it goes.
I mean, it's just a bull market, right? It's not like there's anything to get excited about.
It is. I sent an investor update to the Gebula investors, and it was the first time I felt comfortable being like, it's the bull market now. I don't. In one of these past episodes, we were discussing like, it's not a bull market if the buying is not indiscriminate. This buying has definitely been indiscriminate.
What makes you say that? I mean, it's okay. So it's November 13 now. Bitcoin's at 87, 88, something like that, thousand, and it went up. What's it, like 7 days in a row without a single down day? That's definitely indiscriminate buying.
We put on 700 million worth of market cap in about a week.
and at some point, I'm not sure if it's still the case, but the largest Bitcoin ETF had more assets under management and value than the largest gold ETF. So yeah, that does scan like a bull market thing. Now, given our regular schedule, by the time you listen to this, Bitcoin will likely be at 35,000 or something, but we'll see.
We'll be publishing this episode sometime in late 2025, probably.
Yes. Once portable quantum computers have broken all this stuff and somebody has moved Satoshi's coins and everybody has freaked out.
Just in case, I have some notes on what to do in both a bull and bear market to give as financial advice to our listeners.
Yeah, nothing is financial advice. Don't try this at home. We are professionals. I say that in jest, but it is kind of true. But yeah, the wackiest thing I think that happened, and so I'm curious to get your guys' take on this, was that Bernstein, this like big, I think it's a big asset manager, as a wealth management advisory thing, whatever, I don't know. In the US, they put out this memo to their clients, which said, "Welcome to the crypto bull market. Buy everything you can." Ricardo, for the audio listeners, Ricardo made I'm not sure what kind of face, but a face.
Eyes popping out of my head face, basically.
And so, okay, let me put a little. I'll give a little bit of context on my thinking, and then curious to hear your thoughts. So, my first reaction was, "Wow, that is wildly irresponsible." And then I thought about it for a little bit, and I kind of started to come to the view that it's a pretty measured risk on their part. So, from like a risk reward scenario, worst case, right? It's not a bull market. People get it. Like, no one's actually buying everything they can. That's not what's going to happen. That phrasing mainly just affects the sort of urgency with which they do it, but they have some allocation they're going in with. And so the worst thing that happens is it's not a bull market. We go down a little bit, and okay, that's not great. Maybe they lose some clients, but like maybe not even that. The other, like the positive scenario is that it is a bull market, and by creating that urgency in their clients front run the majority of institutional capital that's coming in. And so, and if they do that, they potentially become like a legendary call, you know, even though obviously anyone in crypto is like looks at this and is like, okay, you're buying now. Like I'm already up like 20x, but like whatever, guys. But from their perspective, it kind of doesn't matter, right? Like if you're trying to time it, you actually want to go in with urgency and get there first. And so I don't know, maybe we'll see how this ages, but it may turn out that it looks pretty genius later on from like a TradFi perspective. But curious to
Yeah,
hear what you guys think.
this is a pretty classic saying in finance that if you're gonna panic, at least be the first one to do so. And this is like something similar to that, where it does feel like the risk reward is still like very positive because the average capital allocator just isn't here, and like even though big sums are moving to like BTC ETFs and stuff, it's still like obviously very small. So either you kind of do want to get your positioning in a way now, in the hopes that the market is very positive for you, because if you just start dollar cost averaging in and you have like a slow process and stuff like that, you may get pretty adversely hit. I'm thinking like this newsletter is one that goes to like big clients all over the world. I'm pretty sure this hits like the inboxes of Finnish pension fund CEOs and stuff, and they'll read this, and I think there maybe the worst thing that can happen is you are forced to become more positive on the industry, simply because your colleagues across the pond who make more money than you are.
Okay. Okay. Well, let me just stop you.
Okay.
Finnish
I will-
pension funds are going to be the last motherfuckers who allocate
Yes,
anything.
that's what I was saying. That if those are the kinds of people who I think are in the process where the process will take so long, it will take so much positivity for them to like turn their heads on this, that they will like by definition kind of, if the market cycle gets big enough where they're in a quote unquote forced to take the position, they will be the last ones, and they will be kind of like at the tail end of this thing, and then they'll sell the next bottom and they don't have any conviction and stuff like that. So they're the kind of worst type of investor, and I think if you actually follow the Bernstein advice, you avoid that worst case scenario.
Yeah. You don't buy Pico top. You buy somewhere on the like upwards rally.
So
On
when
Finnish
did
pension
they?
funds, though, it would be. I think there's a fairly good chance that Equilibrium Ventures is like Fund One is the best performing fund in Finland. and I wonder, and I was thinking about it earlier today. I was like, I wonder if that would get the pension funds like to actually consider LPing, and then I quickly came to the conclusion that nah, probably not. I think you probably need like $1 billion in AUM before anyone here bats an eye.
I think it's a it's not reputation risk. It's actually like the individual's risk within those companies who are kind of making the decisions, where when they feel that the reputational risk or risk to their own job is larger than the risk of not allocating, then you see allocation decisions happening. But that's really the only function. Like it's not an operation that is supposed to make money in a sense. It's to save face in all scenarios.
So wait, when did Bernstein put out this newsletter? Was it like yesterday, a week ago?
Monday. Their Monday morning
Monday.
news.
Wow. Okay. So yeah, it's pretty okay. Like definitely not the phrasing that I myself would have used, but I'm not in that business. And as you mentioned,
like you could like they could have delivered it with more like
being more measured,
buy these assets or something like that. But maybe that isn't entirely the point, because everyone is gonna like you're buying Bitcoin probably. Then after that, it's like, okay, Solana, Ethereum, like these guys are not gonna go out and start buying some like shady shitcoin. Right. And so like maybe it doesn't matter that much. And ultimately it in real bull markets, it's been quite difficult. Hopefully this will change one day, but it has been quite difficult for any asset to not go up, even the shit ones. Like fucking Cardano is trading at 20 bill. Like what?
Yeah, look, and also like the phrasing itself is marketing, right? We would not be discussing it right now if they had put out a more measured press release. So yeah, if the market craters next week, then no matter how they would have advised people, that those who follow the advice would be screwed. If the market moons, then they're super geniuses who made the right
Yes.
call in the boldest possible manner. So it makes sense. And also, if Big says that they would put it that way, I wouldn't necessarily recommend people who do go out and buy shitcoins to go out and buy everything they can. But there's also something
what's interesting. What's interesting, just quickly on that. So like I agree with that exactly. But what's interesting is that they are like a legitimate institution. And what I found kind of surprising about it is I really haven't heard any institutions like that phrasing anything like that. Like that's a very big difference to how they would put out anything regarding traditional stocks or whatever. This is like jumping on the degen train thing. And I'm not sure if that's gonna like land well or not, but it really does depend. Like look, we have non-zero interest rates. We're probably looking at a Fed pivot at some point, because inflation is probably not gone away. It's still not at 2%, and we're lowering rates fairly aggressively, or the Fed is lowering rates fairly aggressively. So like stuff is potentially going to go sideways at some point. But yeah, I don't know. I lost my train of thought.
No, what I wanted to say is that when you made the comment of like, oh, right, you're telling people to buy now, but there's being let's say playing the devil's.
Sense. I think that makes sense.
That's what I was going to say.
Would they have
the
said it in
advocate?
the bear market? Sorry, go ahead.
No, I would say that at this point you could see it almost as paying for confirmation, right? What we were discussing, I think it was a couple months ago, what it would take to get out of this range, and one of the things that I mentioned was that I thought that there were too many worldwide uncertainties, and we had to remove some of the uncertainties. That the U.S. election removes one, the fact that it was the Republicans and not the Democrats, then that removes the likely threat of violence immediately after the election. And this also gives people an idea of how some, let's say, global political things might end up resolving as well, because the party in question has been extremely vocal about those. So yeah, this definitely seems like you could phrase it as paying for confirmation. We know that this thing is going to continue going up for a bit. We have de-risked all this sort of stuff. Knock yourselves out. Not what I would have advised, but
all-time high breaks are a classic place to buy. And forgive the source on this, because you should evaluate the source on Su Chu, but he always says that more money has been made buying all-time high breaks than anything else. And in this particular pair of wisdom, there is an element of correctness to that, which is that like normally like after all-time high breaks, it had like price action has been very positive. So you think about like breaking 1,000 for BTC, then breaking 20K again. And now, well, I mean, we did break it technically like before, but if you just think about it as kind of actually breaking it right now, then it like from a historic perspective, like people in this industry love to extrapolate out of sample sizes of 3 a lot, but it has gone very well. So like I do think it's actually the right thing to say in a way.
I found my train of thought. So this is what I was what I was trying to say is like it's possible that like the actual top is lower than it's been in the past, but I think the fairly reasonable bet to make is that it's still going to be higher than the past all-time high, and so you have some range above the previous all-time high that you're kind of targeting. And actually, if that range is compressed a little bit, i.e. like if the new top is not quite as like high percentage wise as the last one, which makes sense because there's more capital and the interest rates and whatnot, then you actually want to be more aggressive in the moment of your entry. if you think the prices are there, because it may not go up 5x from here, as has like kind of happened in the past.
And if it goes really high like it has, but then it crashes, previously it's crashed always to kind of like the previous all-time high level, or like quite often in that range. So then you'd kind of like at the end of your trade in a worst scenario, historically, of course, the worst scenario can be a lot worse, but you would end up in like a flat place, which you could be quite happy with. But
yeah, because that was everyone's entry price, and they don't want to
yeah.
sell.
And it may be interesting to talk about what exactly one thinks that ceiling is, because I do think there's one thing that it makes the ceiling actually quite impressive, which is the U.S. strategic reserve. And if that thing actually happens on Polymarket, it's like 30% at the moment, and it has any legs to it. Even if by definition, the size will actually be quite meaningful for this market, but even if the size isn't like something insane, you do have like a pretty crazy pile-on effect, in my opinion, where like the countries who are able to move fast will actually do something, and you'll see kind of like El Salvador will become like suddenly surprisingly wealthy on the balance sheet and stuff like that. And then you can actually get kind of because we talked about in previous podcasts about like you need like triggers and you need like these kind of financial things to go right. Like the adoption story is one, but then the kind of quote unquote bubbles have kind of always been around this kind of financial driven activity. So this one, building up strategic reserves, is like a storyline as strong as anything that has ever happened in the history of this industry. And that one actually, I would say, puts like if that happens, like we can argue about the probability of it, but I don't think we can argue that it puts the upside surprisingly high on this cycle.
Yeah, I mean, well, one thing that this cycle will, I think, do, regardless of what happens, is it will, for the first time, kind of really nail home that this is not a purely zero interest rate phenomenon. Which I think that single thing opens it up to a huge amount more institutional investors, because that's the one maybe like really strong counter argument that you could have had in past cycles, is like maybe this all happened just because there was too much liquidity and interest rates were zero. But if the cycle keeps going regardless of the interest rate environment, and like if it's not tempered too much, like again, you would assume that it, like the percentage change gets smaller over time because it's just like law of large numbers. But like you can't argue that you wouldn't like if it's happened 4 times in many interest rate environments, and like you can't anymore argue that it's like, okay, it'll go away if this happens. And so I think that is like a structural change that will change a lot of stuff in TradFi that relates to crypto. Like I think it will be seen as much less crazy from here on out, to be allocated into crypto as a TradFi player.
Yeah, we'll see. I know Mika did mention the whole use of strategic reserve. I do strongly advise people to take whatever Trump may or may not have promised with a gigantic amount of SOL. You have no idea what they are going to end up executing or not, or then things that make brown people's lives miserable. So be mindful of making bets based on that sort of thing. And also with the Suzu thing, go research who the guy is, just in case.
Yeah, if you don't know 3 Arrows.
Yeah, Three Arrows Capital is
context.
definitely an infamous name. They dragged down a whole bunch of people with them. Was it Zuzu the one who started this is the super cycle, we're going up only from here thing? I think it was him who started with that stuff like back in 2020.
I don't remember. There were a lot of people. There were a lot of Bitcoiners, like talking about that. I don't know where it started. That whenever someone says this time is different, just disregard everything they're saying.
Still,
Yeah.
the only other thing that I did advise a friend who was assuming that, oh, it's a crypto president, crypto is going to be up only from here. Still keep in mind that these things are still risk assets. Same thing as the stock market, same thing as everything else, and risk assets will be affected by globally adverse conditions. So
Yes, tread carefully.
don't get high on crypto Twitter supply.
A little high, just a little bit.
Okay, don't get too high.
To defend two of these things, I would say one is that my favorite hobby is finding good quotes from questionable places. So that's kind of the message on one of these things.
It's perfectly possible that they had the right idea, just sucked at execution.
Yeah, and maybe here on the strategic reserve side, there's two separate discussions to be had. One is what you think the likelihood is, and whether or not you go short or long the kind of polymarket 30% number. But then maybe the thing that I would ask here is, do you think if it happened in some like or even like semi-negligible size, but like in some sense they would actually have like somewhere there would be a buy order, like it would be announced. Do you think the effect of that would be small? Because that I do not believe.
Oh no.
Well, there's wait. There's a third discussion as well, which I think is kind of underpins this. So there's like, you can think about it as like, is Trump going to do X, Y, and Z? I'm fairly not interested. Like, I'm not really interested in that conversation. What I do think is more interesting, which will like over time lead to these kinds of things happening in general, is how well is Bitcoin actually associated with the narrative of being an inflation protection mechanism?
Yeah. I mean,
I would argue that in the past 4 years, that Bitcoin narrative has become incredibly strong, like much stronger than I thought it could be. Like, it is a legitimate big financial players are presenting to their investors and clients and specifically talking about it as like, you have gold and you have Bitcoin. Like, whether you think that makes sense, and on a technology level especially, is kind of irrelevant. It's like, does everyone think so? And I would argue, I think like a significant portion of the sophisticated investors in the world do think so. And so like, I don't think it's outlandish to think that these kinds of Bitcoin reserve things would happen. I think they 100% will happen. Whether it happens in the next 4 years in the US is sort of like, who knows? But they will start happening more and more.
And to address Mika's question, no, it's not. That wouldn't be a small thing, no matter if it is a tiny amount. I mean, let's say that you could argue that El Salvador got lucky, right? It could have gone the other way. But the key factor there is not, was this a good bet from El Salvador or not? The key factor that is likely stopping other small countries from doing it is that they're likely concerned that at some point they may need something from the IMF, and the IMF has been funding the El Salvador experiment.
But they will stop funding once legit countries get into the game.
Exactly, that's the thing. Once this is done by a country that doesn't give a crap about the IMF, or the IMF doesn't want to fund, then no matter what amount it is, they could be holding like 1 Bitcoin for the entirety of Germany or whatever. At that point, then that does legitimize it significantly.
Yeah, Mika, we need to get the Finnish central bank holding some Bitcoin.
Yeah, before this call, I was just saying like about like Max Payne scenarios where people sell too early. It's the kind of Isaac Newton chart. If people know that Isaac Newton buys stock, he takes a profit. He's very unhappy. He buys back in size at the top, and then he goes broke. So if you think about like those kind of Max Payne scenarios, Germany did get rid of a pretty big BTC holding just right now, but they did get it at least at like pretty good prices. Finland, I think we got at like 20K our position out, so that was like kind of, I think they got like 60 million out of that. That position right now would be in the 200 somethings. So for the size of the country, actually, if price goes to like 250 or something like that, you actually start talking about things that would be meaningful for the balance of budget of the whole thing. So that's an interesting place to take it. But
yeah, I mean, someone like it's the same thing as like, you know, if you're a traditional LP and then you're like looking at, you know, traditional VC fund decks and their returns, and then you get a crypto fund deck and you're like, what am I doing? Like what is the point? So at some point everyone will be looking at El Salvador because they'll be handing out money on the streets, like they're Norway or something, and going like, what is going on? Like, why are we not in this? But anyway, that is like pretty speculative, and I don't think like a bull market requires that. This sort of will central banks do blah 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 reserves thing has like kind of always in every bull market. There's a question of like, when is it going to happen? And it has in fact started happening. It just hasn't been done in legit countries really. So it's a matter of time, but it could be a long time. One thing that would be interesting to discuss though is how you see the cycle playing out. So the in terms of altcoins, because traditionally what happens is Bitcoin goes up and then it kind of like flows down. So there's like this sort of like Bitcoin up, then like Bitcoin kind of plateaus a little bit, and then everything else shoots up way more percentage wise. Now, of course, in the last week, what we've seen is just everything go up. But I'm curious how you see that. Yeah. Well, I'm curious how you see vertical. That. Yeah, exactly. Well, Doge. How much is the market cap of Doge? Let's just check. The Doge is trading at a 53 billion FDV.
Yeah, I believe that is higher than General Motors. So.
I love it.
You're gonna kill me, man.
There's gonna be some like kids, you know, like 12-year-old kids who've just been mining Doge and something who are like billionaires. It's so great. But anyway, how do you see that happening? Because I think the ETFs slightly change the structure, maybe where like, and maybe not because like there are buyers in all these who are like not buyers through ETFs, and those are like, in my mind, it's those buyers who have like kind of this flexibility and that create the flow. And partially it stems from trading pairs, like especially stuff like Uniswap, where like if ETH goes up, you just kind of have a natural upwards progression. But I'm curious how you think about that playing out. Like, how do we have an alt season that comes up sort of separated from Bitcoin and maybe ETH and some others, or how does that work this time around?
I'm not sure if I necessarily have a good analysis of it, but I feel like I have a strong analogy to it in a way from history, where like the way it always has gone, it's going very similarly right now. So your initial run up is very BTC driven. So BTC dominance went from like 35% to 60%. It kind of in this first really big run after breaking its all-time high again, it actually kind of held that mark in a way. So like alt season didn't really happen. BTC got the same performance as it did. But then historically, when that time has come, when you go further out on the risk curve, it comes very, very quickly. And it's like kind of very rapid process where it goes. BTC dominance last time went from like 70% to 30%, and just like it's like a 2-month thing typically. It's like has been very fast. But then the question for me, and why I said my analysis maybe I'm on poor, is I don't necessarily see what exactly is the trigger for that in a way. But that it could be like a lack of imagination, where like Polymarket was already a big part of the election. Maybe there is a strong enough narrative to kind of push towards things where consumer applications are happening, like on Solana, and projecting their growth out be like overly positively. So maybe that thing exists, and it's just kind of a natural way from when people buy, like, because there is an ETH ETF, just no one is buying it, right? So these buyers are going through the same kind of progression that historically they have gone through, which is they start from BTC and then they move out on the risk curve. So maybe it just sort of happens naturally, and you kind of find narratives throughout the process. But yeah, it's kind of like, and also if you want to be kind of make these like lazy, trite kind of things, it's always like, well, when people say that BTC is the only thing that's gone up and it's the market structure has changed and all these allocators actually only want BTC, that's when you actually the other side becomes super attractive from a risk return perspective. So maybe that's what's happening at this very moment right now. So I don't know, like it's kind of hard for me to see what exactly the trigger is, but it feels also very difficult for me to kind of bet against such a thing, because I feel like I understand how the market behaves when it does that particular thing quite well. But so yeah, so there's a couple of thoughts to respond to.
Yeah, I don't know. It's hard to say exactly how it is going to behave this time around, mostly because the general conditions have changed so much. Usually this massive pumps basically came from capital rotation, but that usually happens with large allocators, right? Once you get to the market capitalization of an Ethereum or a Solana, you're not going to move price by a whole bunch of randos who decide to put in their profits from an NFT or something. So in order to actually move this, it needs to be somebody with a whole lot of capital to rotate. And I don't expect that people who are like extremely large allocators who are coming in through ETFs are going to rotate capital that way. So they would need to, I guess, be unallocated in order to actually start buying the other things. So I know it's really hard to say for me, and because I don't really have a clear perspective of what percentage of funds coming into the market are right now through ETFs versus just crypto native funds. So I really have no idea. It wouldn't surprise me, and the way things are pumping, even if everything is lagging Bitcoin a little bit, they're not lagging it by that much right now. FBTC pumped last week significantly. So
but I mean, dollar amounts wise, lagging significantly to keep up similar percentages.
Yeah, that's fair. So I don't know. This seems to me, it feels a little bit like uncharted territory with all the new variables that we have going on. So I'm just happy to enjoy the ride.
Yeah, the capital rotation that has happened has been from like ETH to Sol and Sol ecosystems a lot, and like Sol DeFi got kind of re-rated in the past week or so quite heavily to kind of match their activity levels more so in line with like what the ETH equivalent valuations are. So yeah, that's kind of like within the industry, and that's a lot of crypto funds who've already been deployed for a long time, and a lot of their LPs are crypto native as well. Like only funds who got that like early 22 with vintage really got like money outside from like real outside allocators, and those like faucets haven't been tapped in a while. But that really affected like the venture market last time, and like that capital, I don't know if it even comes to like liquids that easily, because they again like start looking at kind of very traditional venture situations, and they don't necessarily look at like liquid ones. So that it kind of puts like this whole area of Aave, Lido, Camino, Jito, that kind of area puts it into like a pretty difficult place where it needs to really, really find something quite different than today to actually kind of really, really outperform BTC in any cycle.
Yeah, I want to talk about the mechanics of launching into this market briefly, but before that, like, how do you see things like Jito and these like kind of like the ones that have launched in the past maybe 6 months or so? Do we have a view on like how those will perform relative to the market? I have quite a strong one, but I'm curious to hear what you think. So maybe just to list off some. There's at least like Jito, Starknet. There's the whole L2 ecosystem basically. ZK Sync, You could maybe even put things like Celestia into that general bucket. Like basically anything that's launched in the last year. How do you think those things will perform?
There are individual cases. It may vary a bit, but one heuristic that is probably pretty reasonable is that you look for outperformance on the ones where the cap table has kind of been cleaned out and any incremental buying leads to a good scenario. And then the ones where that doesn't happen, then it can be kind of worse. It depends a lot on the investor base, because actually, like in some specific scenarios, you may find that the investor base is like super long-term holders who actually will like the kind of true VC, the true believer, and they will hold it more so than
really.
Well, there's nuances there, like it's a percentage thing, right? Like some of them behave more like that, some less, and you have like this somewhat of a different grouping of them, and that affects the thing. So, but yeah, I think that's like one thing where I think you're likely to find outperformance, at least from these kinds of names, where the cap table is cleaner than like in some others.
But basically, none of them have a clean cap table.
Yeah, the ones the ones this cycle don't have it, and the ones from previous do. That's
yeah. So before I give you my take, Ricardo, what do you think?
No, I don't really have anything to add to that. I haven't been looking into the L2 space that much, so I could definitely not pick like one that is likely to outperform. I am myself a meme coin minimalist, so any token, like particularly any governance specific token, I would not be extremely positive on. But meme stuff pumps all the time, so yeah, I would definitely I would definitely lean towards what Mika said, which is basically look for those where insiders are less likely to be able to dump on you as things go up.
Yeah, I think with these things that have been launched in the last year, unfortunately, the reality is that there is quite a lot of sell side pressure. That doesn't mean they will perform badly, and I think in many cases, especially the L2 cases, I think the tokens are actually slightly undervalued, probably. But that's kind of like a perception thing, and with that sell side, like if the narrative shifts from right now, there's so there's a narrative in the Ethereum ecosystem that like maybe the L2s are leeching off Ethereum, and basically a lot of the sort of upside is going into the L2 tokens. I think that's 100% true. Like, kind of obviously, like if you think these things are the future of Ethereum, like, and they have more upside, you would go in there. And that creates like a strange situation. And so but at the same time, they're not being valued very highly, partially because that narrative hasn't like played out that much. And so that may switch at some point. And I think they are trading like fairly low, considering that they are leeching from Ethereum. So if you believe they're leeching from Ethereum, you almost should be valuing them quite high.
You would be valuing the space quite high, but the problem with that is if you have, I don't know, 10 mostly undifferentiated L2s, which one do you figure out is going to be the winner, right? Other than by TVL.
Yeah, well, this is the other question. There's also the point that like Base doesn't have a token; it's uninvestable. Kraken's new Ink thing, which is also going to be an OP stack rollup, probably not going to have a token. So it creates an interesting situation. But I do think they'll, like, in relative terms to the rest of the market, they're like bound to perform worse, simply because there's quite a lot of capital in those projects that is going to be unlocked over time, and that capital is getting a huge multiple anyway. Like, whether it's the right price or a low price or not, they're just like dealing with a multiple return. And so I don't think L2s will be fairly valued for quite a while. And the same thing applies to things like Jito, Celestia, all kinds of other stuff. Basically everything that did the high FDV low float thing. It's not because of the high FDV low float thing, but it's related.
Yeah, I think this is like a trade where one can be too early and is very likely to be early, because intellectually, I think you can get quite easily to a place where the top L2s are undervalued, at least relative to the L1. So that means that there should be like a re-rating between these two things. And I think like over the full course of time, that's correct. But the two things you identified there that are the blockers to that is, one is kind of like timing and being like early to that, and related to that is just the fact that there's no clear winners yet, except base, I would say, in a way, which makes it very difficult to kind of fully rotate in a way and really aggressively start pushing that side. And until you have like a proper ecosystem winner that looks like a Solana ecosystem, then
and is
kind of
investable.
stuck in the yeah, exactly. You're kind of just stuck here for a moment. So that's like kind of the thing, you're not to look too forward ahead, but if we say like, okay, BTC goes to 300K and then we have like a crash and it all goes horrible, it's exactly the same as has been previously. That's the kind of thing you're looking for next time around in a way. But I think you're just too early to the trade at the moment.
Yeah. And some of the projects may have investors that are still locked up for many years. And so in those cases, maybe it doesn't go quite like that. But I think it's sort of all related to like the launch meta that has been going, right? So you large airdrop, immediate sell side pressure, like high FDV launch, low float with lockups that are unlocking over time for people that have multiples and so on. So they haven't kind of slowly progressed upwards in a way that sort of would kind of allow the market to price them properly. It's just sort of like, bam, we're here, and then a very difficult kind of path from there. So I agree. Next cycle is probably the way to go. And I do think this applies to Celestia and Jito and many of these other ones as well. Regarding actual launch meta, I'm curious. So I think people are clearly sort of starting to move away from that general practice of launching very high and then kind of like, and that like from a historical perspective has actually been a good strategy, because like if you launch high enough, you just kind of, people like bucket you in big project stuff, and then mysteriously that many projects have managed to stay. Like Internet Computer, cool technology, no usage, launched very high, just kind of stays. Like you can argue that it hasn't gone as well as it could have, but like we're talking multi-billion market cap regardless. And so that's kind of been the strategy. I think people are like, that maybe went too far, because what happened was you had people doing that successfully, and then private rounds basically like rose in valuation to sort of close off the ARB, and then it stopped working because you just had people buying at these insanely high valuations. And I'm curious, what do you guys see as kind of, where do we go from here? Like how should people be thinking about launching into this market, but also just in general?
Well, there have been a lot of changes, I think, kind of at the margin so far. When you look at these projects, like there's some projects already who are doing like kind of a bit more open fundraisers. So one is Contango that did like a 4.5 million raise at the kind of same valuations that the VC had a couple of years ago, and that got like a big buyer group. You have like Echo as a platform that's becoming more popular, that's built by Kobe, that has like these investor bases that are in the thousands of people. So that kind of changes a little bit of the dynamic already. And I think that's kind of healthy in the direction. I kind of want that to be 100x more like 100x more thing than it is right now, but you do see it like at the margins already a little bit. So maybe it's just a continuation kind of that trend. Maybe like an extra question to ask here is, what if Polymarket had launched a token and they'd have some investor unlocks now, but like a pretty chill schedule for the next 4 years? How do you guys think that token would have done like in this environment? Because that's one where it's kind of the base scenario in a way, where one of the assets, one of the assets that we would have liked on the market wasn't available there.
Yeah.
So I wonder
same with stuff like base, right? Like,
but that's what I'm saying. It's like the kind of, as long as you don't have clear winners, you have all these like weird dynamics, but the closer you get to like feeling like they're real winners, maybe those can run so hard that like the concentration is actually like it could be like those are, you just get insane profits and re-rates, and then through that you start to find like people start to go towards the liquid name to try to find those same things, and like that's where the market dynamic can actually change, where instead of like chasing the next like kind of VC arbitrage round, you're actually chasing these things where you get semblance of product market fit, and when that happens, those re-rates kind of happen very violently. So
wait, just to understand what you're saying. So basically, you're saying that like the market could kind of watch the VC stuff, and once something seems to have product market fit, go to whatever is available that's sort of attacking that same problem, that's sort of more open and accessible for investors, and give them a ton of capital to execute. Is that?
Well, maybe what I'm saying is just that we end up in very kind of esoteric discussions about market structure quite often in these things, where it's like, oh yeah, this unlock here and this category here, and those are kind of things you were talking about, and then like you just need something to start breaking that dynamic, where maybe it doesn't move to a meta that like makes necessarily 100% more sense, but it kind of moves to like a different thing where valuations can move from a different place to like instead of thinking okay, like L2 should be valued in the 2 to 10 billion range, you would have Polymarket that makes it so that this new category or categories or other categories can do that themselves by going from like, if you had the token at 200 mil, which unfortunately you didn't, but I mean, Coinbase stock, you had it pretty low, and it's kind of like reacting to overall the market, of course, but in positive case, you could say it also prices in base success. I don't know if that's actually true, but like it could be true in a way. So
I mean, base does generate a lot of revenue for them.
Yeah,
I'm not sure that I would actually lump those two together, and why they would have done well. I mean, I think it was Kobe, given that we just mentioned him, who at some point pointed out that the only scarce resource in crypto is attention. And it wasn't just that Polymarket had good product market fit. I mean, Polymarket could have zero product market fit on anything other than the election, right? But just the fact that they had this massive attention directed towards it, that already, I think, would have been very positive for it. But at the same time, I don't think that would have caused people to go out and fund or invest on other betting prediction markets, right? Simply for unless they were chasing, simply for the fact that these orders likely would not have the attention that Polymarket does.
Maybe the positive way to phrase what I was trying to say is exactly kind of that, but then taking the leap that, okay, now that we were able to direct our attention and we're able to imagine a winning scenario in one area, that we are able to start doing so in other places as well. And that's how you get this kind of like proper like alt season that wasn't happening before. Like the fact that Polymarket didn't have a token in some ways could like lead to a scenario where the alt season isn't as strong as it would have been if Polymarket had launched a token at the bottom of the bear and it had gone from 100 mil to a 10 billion valuation, and then the kind of imagination of the people would have started building alt season in their heads from that in a way.
Okay, so what you're saying is that if those cases would have had a token, then we would likely be Like things would be frothier right now, and people would be getting crazier.
You need winners, like you need actual really big winners. Like if you think about
you
DeFi,
need collective wins, right? Like
yes,
VC
Yeah.
wins don't count here.
yes. So DeFi has come back in a pretty good way, and like Orbit price action, for example, has been pretty good. And they're like one of the triggers for that actually was kind of like Pendle is one of the big winners of the cycle so far, and that kind of reinvigorated DeFi a little bit, and you actually see a little bit of that PA, in my opinion, in like Aave right now. So that's the kind of direction I'm trying to kind of point out.
Yeah. So I mean, I agree with that, but I think the pendulum is swinging now pretty hard. So like out of all the projects that I kind of talk to in different areas, they're basically all planning to launch quite low. Which is like a pretty big difference to how people have been thinking about it before. And I think that's super healthy. Like I think what we need back is ICOs. Like maybe like not just with a white paper, haven't done anything. Like you can have a few VC rounds, but like become public early at low valuations and let the community drive up the price if they think it's good. That's a much healthier kind of situation to go from. And it has some really big benefits. For example, if you do an airdrop, if you launch it, let's say 300 mil, and you do an airdrop, the sell side pressure created by that airdrop is way smaller than if you're launching at 3 bill and you're giving people hundreds of thousands, and like just somebody just gets 200,000 extra. They're like, well, fuck it, I'm just gonna sell this shit. And instead, you airdrop at a level where, like, realistically, the amount of dollars you're giving people is quite low, but they have a huge amount of upside. And so they're much less likely to sell it straight out of the gate. Same with VCs, everything. Like when like there's just less multiples to kind of sell on for everyone that's involved, which then makes it much more appealing to retail. And in general, like if you can create that situation where you launch that low, but then you go to multi-billion whatever, I think that's super healthy. And you just have this like balance where you can still have unlocks and things like that, but they sell into a rally essentially, as opposed to selling into a flat market. And so I think, because I think the absolute worst thing that you could do now as a project is launch at a valuation where you're the only one in red when everyone is super green. Like, I think that dynamic will like paint an image in people's minds that they won't forget very easily, where like they just look at CoinMarketCap and it's like, oh, these are the only guys not doing well in this market. So I think that is the direction. We'll probably, like, the pendulum will swing too much. There's a balance somewhere. But I think that's the direction things are going, which I personally think is great, because it means that we're kind of getting back to one of the original promises of crypto, which is like you get access to things much earlier than in traditional markets.
This has been the classic thing that people really hate about the market, is like VC insider unlock buying, retail having to buy high prices. So when you saw kind of that hate really get really strong over the past couple of years, that's the market readjusting in a nice way, where what you want to do is you want to get like the good projects and the bad projects, but even the good projects kind of coming out very small valuation, because then you can be a VC, then you can be an asset picker in this industry, where, okay, like everything that used to launch at 300 mil, because it's so hated, it launches all at 30. And then you find those winners from that 30 who go to the 300, and there are these 10x's success stories. And then that's kind of feeds itself. So like the fact that like the number one discussion topic on crypto Twitter has been this kind of unhealthy market dynamic for 2 years has slowly flicked it to a place which allows it to kind of get back to numbers which allow winners to happen again.
Well, you can't build a super strong community if no one makes money. Like that's kind of like a basic thing, but that is in fact the situation with almost all the projects that have launched in the last year. Like is there a single project that is launched at like a $1 billion+ valuation which it has made sense to hold up until now?
That's a good point. And then also I would say that
Sorry, at what number did you say?
billions.
At a billion plus valuation.
Yeah. And also for these projects, just realistically, like we don't also have to only talk about the kind of market dynamics and numbers, but when they start like distributing cash flows in the like burns, for example, there are lots of projects right now that are trading like between 30 and 60 that are doing like buy and burns that are like that they're trading at something like 20 to 30x earnings, and that is, if you want the positive dynamic to happen, just from your even just like kind of your own protocols organic buying, then leading to something bigger. You can't even execute that at larger numbers, but you can execute that when there's at least some not like insane mismatch between your actual valuation and the cash flows that you're producing and distributing to token holders. So even in that case, ultimately I think it comes down to like picking winners, and it comes down to fundamentals and that sort of thing, but it doesn't allow you to have those really great success moments because then you just never get to a point where your cash flows actually match what your valuation is.
With $1 billion valuation, I mean, it's hard. It will depend on what you mean by make sense to hold up until now, right? Sure, most of them have
mainnet launch price to now.
Again, it depends. For instance, if you got, I don't know, Jito for free, right, and you didn't sell it, but you didn't sell at the top of, what was it, $4 or $5 or something that it was, you're still pretty much far ahead, right? So if you're willing to take a long bet on this, then sure, why not? If you bought,
but I'm saying if you bought, not if you got it for free. Everything above free is good, right? Like
sure. Well, actually, I would say that if you get it for free, then why not sell it anyway?
Exactly.
Let's say that if you bought Jupiter launched at close to $1 billion, I think it settled around 70 cents. I think it is above $1 now, so you would still have made like 50% on top. That's not terrible. It definitely, considering the way the market is going, is not going to have been the best capital allocation you could have made, but it's not terrible.
And you would have made more on Sol. That's the thing.
Yes, you definitely would. Sol would have outperformed.
Jupiter's done like 30% or so.
Yeah, I don't follow it anymore, so I don't know what it is at right now.
Yeah, not too bad, but yeah, you would have done better on Sol. And this is kind of a bad joke. You could argue that you would have done better on ETH, even though ETH didn't move, than being in many of the L2 tokens.
Okay, that's just mean, man.
It is true as well.
But I do think it is true, yeah. But I think the L2 stuff is interesting because I think there's, like, as you say, like a longer term structure where like some power laws apply to the L2s, and you would assume that if I think it's fairly clear that a vast majority of volume is going to be on L2s in the next 5 years, and if that's true, which I think it is, then you're talking about like double-digit percentages of Ethereum market cap, I think, per, like, for at least the winner.
I'm willing to take this further. Which is that I think it will be the size of ETH. Like I think,
yeah, quite possibly.
I think that's what's going to happen. Actually, one winner that I should mention also is because Uniswap kind of took the base of took the EVM DEX market very, very largely, but there's one place that they didn't, because Coinbase pushed Airdrome. Airdrome is also one of the big winners because they got to be these are difficult, the EVM world, because when you're funding new things, it's kind of very difficult because the existing competitors are so strong in them. But there you actually had this one specific market dynamic which allowed them to have a new DEX winner on base, and that like drove huge returns for Aerodrome. So actually from the VC perspective, this is actually one of the very difficult things, because if you're funding early EVM stuff, like people are funding right now Monad and Say and all these like paralyzed EVM stuff, but it's the same apps, right? It's like Uniswap's going to be 40% of the DEX volume on Monad. So it's actually very difficult for you to find winners. And this is a situation where when the market dynamics actually do turn, those funds that I think like were in liquid positions in those ecosystems that were like doubling down on those winners will look even a lot better, because they don't realize, the average market participant in this early stage market doesn't realize that the EVM winners are so much more difficult to produce, simply because a lot of those really strong names exist. Like Aave, for example, on just the TVL side has eaten up so much, and it's been like, and lending in particular is a market where it's very, very difficult to start from scratch and compete against them. Like I think you'll end up with those situations. You want situations where the public market beats out the private market in a very substantial and obvious way. That's what you really need here. So you need them, like the VCs, to put in a lot of like these EVM projects on Monad and stuff, and then have Aave go up a lot. Like that's really what you need for this kind of application specific change, like to happen. So maybe it like will, but it's happened in pockets already, but like in a large way, it hasn't happened yet. And maybe it's because like Aave isn't like super undervalued in some sense if you just look at like cash flows or whatever. So it's like difficult for it to happen. But at lower valuations, I think you may find like those effects right now, and that's very interesting for an allocator.
Yeah. Should we finish it there? By the time we publish, it'll probably be winter again, but for now, bull market, yay. I'm expecting, well, I've already started in the past 6 months getting these messages, but I think in the next months or so, more and more messages of people going like, oh, what should I buy?
Maybe the last thing to close with is how you guys have seen like multiple cycles of this thing. So do you have like any general points of wisdom in terms of just what you kind of believe in terms of how you structure your portfolio? What are some rules that you have? How do you like think about things like profit taking or anything like that? Like, how do you think about these things? No financial advice.
No, yeah, totally not financial advice. But usually, so traditionally, my approach to bull market, first of all, in a bull market, I only sell. I do not buy. I have a genius strategy I perfected over the years where I buy low and sell high. Usually, you pass all-time highs. You have pretty indiscriminate buying. You just have like a craze, right? And people start throwing out numbers which are outlandish, like Bitcoin to 10 million or some shit like that. And what I've done in the past is around kind of previous all-time highs, I've sold something. Basically taken out my the amount that I put in. And so I go to break even once we hit all-time highs, and that's a bad sell. That's never the peak. But that for me is just like a reduce stress level sell, where I no longer like it can only be good from here kind of thing. And then usually as prices keep going up, again, it's hard to say with exact numbers, but like as prices keep going up, I'll sort of periodically at certain milestones sell 10 to 15%. And I just keep doing that as prices go up. And I don't get optimal exit points. I don't care because I like buy so much lower. Like if you're buying in the bear market, like it doesn't matter that much. and that's generally been the approach. So it's more like a risk minimization, and then there's just like a very practical thing, which I think Ricardo would echo as well, which is like it doesn't matter what the optimal return is. What matters is like, did it go well for your specific circumstances? And so I in all previous bull markets, I've met people who've like been in normal jobs, like making, I don't know, a couple of thousand a month. And then they showed me their portfolio and they're sitting on like 200,000 worth of Cardano or something. I'm like, what? I fucking sell it, dude. And so it's like, don't worry so much about generational wealth bullshit, and just like kind of make sure you get out with something that is meaningful for you.
Yeah,
I don't know. That's kind of it.
I definitely agree with that. Like, I always tell people, don't try to time the top or any shit like that. Like, there are a lot of issues and objections people have to Jeff Bezos, but he has a sensational line around regret minimization, which is what I always advise people. Like, if you have, I don't know, like the guy that you mentioned, who's like the mechanic, I think you had mentioned that who was making a regular 2K job and holding hundreds of thousands of Cardano. Like, okay, what would you regret more? If this thing goes to zero tomorrow, or if you sell now and it goes to 300K? Write down that answer, check it the next day, see if it still seems rational. Just basically try to minimize the situations where you're going to spend the next whatever many years of bear market kicking yourself, which definitely goes for the don't try to hit the same returns other people do. Just try to do well by yourself and by whatever your parameters are, which something that I did advise someone recently was that I always tell people that they should set some targets, like the ones you were saying, where that's your heuristic. People should set their own heuristics before things start mooning or cratering, because at the point that things start mooning or cratering, they're no longer going to be rational, and they're going to start pushing their own targets up, or just panic selling.
You lose objectivity.
Yeah, and if they had not set targets before now, well, there's that line of, the best time to plant a tree was 30 years ago. The second best time is right now. So start setting your targets and discussing them with people before things get crazier in either direction, effectively.
Yeah, this is good because ironically, from an industry who is so short-term thinking, and we've just talked about attention and stuff like that, it's like it is very important to think about your life, long term, in the sense that if people are young and they happen to make, I don't know, like 30,000 extra or something like that, like if you think about what the value of that is compounded through your entire life and what it means to you later down the line, like those are huge wins to have and can secure so much for you. So it's more about like thinking about levels where your life does improve like quite significantly over the long term, and having that long-term mindset in terms of building up your portfolio.
Yeah, and there's
just one last thing here that since it's related to what Mika said about attention, I spent a non-insignificant amount of my day looking at these things and thinking about this, and still I'm a cognitive overhead minimalist. There's that line of Andrew Carnegie of pull your eggs in one basket and then watch that basket. I'm not suggesting people go into a single thing and then write it, but I have met people who maybe think about prices once a month, and they're trying to juggle 20 different things. Like, I don't know how many freaking tokens. I have no idea how those people manage to not just have all this stuff blow up for them. So try and don't keep more bets open that you can actively think about while doing whatever your day job is, basically. So sorry, go Teemu.
Yeah, and never have more than you're basically willing to see go down 90%. But yeah, I think like the most important thing, which I can say this endlessly and no one will ever listen to me, but it's like it's not this market, right? Like if you're if you're thinking about this market now, like, and like how to play it, you're probably too late in many ways. Like, you can try to rush in like Bernstein and whatnot, but there's a much better play to be made, which is buying in the bear market. And the problem is people never do that. People only notice that something's going on once we break the news thresholds, which now has happened globally. And then they get involved. And then once prices go down, they stop being involved. And I understand that, but that's dumb. Like, it's like when you're not hearing about crypto, that's when you should be looking at crypto and you should be looking to buy. Because now, if you're buying, you're exit liquidity for me. And that's just, how it is. And so, like, realistically, like, try to get out of this market unscathed with some extra money, but the real thing is, like, you have plenty of time. This keeps happening. Just, don't take on massive risks. Don't use leverage, preferably. And then look at stuff to buy in the bear market. Like, you can do ridiculous. Like, you can just buy Bitcoin in the bear market. Look at how it's performed. Like, you can just keep doing that. And it doesn't require a genius. You're just like, have prices dropped 90%? Yes. Okay. Buy. And then forget until, it's in the news again, because it'll be in the news once, prices are sky high again. And then you can think about selling. And that's the easiest way, but most people don't have the patience for that. And that's like one interesting thing about being involved in this industry, and like kind of being a professional in this industry, is you just notice how incredibly impatient and unobjective people end up are. So what happens 100% of the time is, around this time in the market, people will be like, what should I buy? And I will tell them I'm selling, because I don't want to give them any advice. Like, you can do whatever you want to do. I'm selling. And then they'll buy pretty high. And then I'll be like, okay, like, what are you going to do now? And they're like, oh, no, I'm in this for the long term. This is the classic phrase. And then in the bear market, well, in it for the tech, in it for whatever, the vision, ideology, blah, blah, blah. They're very convinced that this is like, they didn't mind that much about buying high because it's a long-term investment. This is what they tell me. And this, trust me, I've had this conversation with at least 20 different people over the years. And then during the bear market, they will change their mind. And they will change their mind in their mind, very objective way. They'll have some reason, like, actually, like, I'm getting more interested in this other thing, or like, I need to buy a house, whatever the reason. There's always a variety of justifications and reasons which sound very reasonable. Whatever the reason, they end up selling at the bottom. And this keeps happening. It keeps happening again and again. It's somehow like there's something about human psychology which makes this very prevalent. I don't know what it is exactly, but it is the most irrational thing. Like, you have something that consistently goes in a cycle, and your approach is to do the opposite. It's like, what?
It's very easy, man. It's what we were saying. It's an emotional decision. It's just that it's an emotional decision that people are trying to rationalize and convince themselves that they're doing it because they have to, not because they just wrote this thing down 80% because they were waiting for it to double from the top or something.
But it's not that. That's never the reason they stay. They're not like, I got depressed because it went down 85%.
It's a rationalization. People are exceedingly good at convincing themselves that they're right for whatever reason it is.
And then at the next market, guess what? Those people are back again at higher prices than, like, and it's just like, guys, like, this, just buy in the bear and treat it as if something you're never going to sell, right? Like, just be like, this is like, I'm going to literally just forget it's there. Like, it's like I've thrown away whatever the amount of money is that you put in. And then have that mentality until the bull market, and then sell. But yeah.
Well, with that beautiful bit of telling all our listeners how they are highly irrational creatures, I think we can leave it there.
We can leave it there. Also, to our listeners, don't call me about what to buy. Okay. Thank you, everyone. We'll see you next time.
Ta-ta.